There are patterns and they have names, right? We think of heads and shoulders and cups and handles. They're also double bottoms, they're double tops. I want to talk about what a double top is and where we are now in relation to a prior high in the market. But some classic examples. So here's the Dow Jones Transportation Average and the plunge that took place in 2009 and this recovery in 2011 right back to former highs. And what we know what happened from there is the following. It was a double top and you got this perfect failure at the high and a really big wipeout. Now, if I were to go on to another example, just to make a point, this is the S&P. We all lived through this. Of course, this was the 2000 peak and the 2007 peak. And if we put in the lines, what we know is we failed right at the former high. Let's keep going. Just to be agnostic, what about Sam Adams? It rose just as of 2 weeks ago to its high, reported earnings, and what it did on its earnings was the following. It plunged, dropped and gapped, and of course the principle was that it got back to a difficult level. So let's keep going, and let's talk about the most epic high of all time. The Hunt brothers tried to corner the market, and they did effectively until the government changed the margin requirements on them and put them out of business, and silver got exactly back to that high, and what we know is it failed. So I want to talk about the S&P. There are minor double tops, intermediate, and major. If we look at the S&P, if it's a major double top like silver over many years has major implications. This is not a major double top. Let's put in the lines. It's an intermediate top, which is to say we know we were here in late January, we're now here in early August, and even if you don't decline, the principle is this. Before you can exceed a former high, you have to contend with it. And what that means in principle is either we back and fill or we back away. Neither is a bad thing, but that's what happens when you first approach a prior high.
You want to invite him over?
I think there's a lot to still need to know. I think he's very worthy.
No.
Very worthy.
No. Come on over.
That's well dressed for a Friday.
Come on over.
Very worthy. Very well dressed.
I was thinking you had to have like 15 charts to get to the desk, but we'll make an exception on this Friday. 10 will do it. What's more likely to happen, do you think, if you do this backfill thing at the retest these levels?
Either is a normal response. The principle is that we've had a 10% thinking. The low was February 9th, and here we are essentially August 9th. 6 months, 10% advance, back to a former high. Very rarely do you get back and just push right through. So it's if you're in test taking, right, you try to eliminate the wrong answer and then figure out the right one. So the wrong answer is just you go right through. It's the other two. It's sideways or down. That's the likely scenario when you first approach a former high.
Well, okay, but how about the triple Qs? How about the NASDAQ that are through that high? They don't have to encounter or deal with what we're in January.
Versus, let's say, industrials, which are nowhere near their high, right?
So can the S&P have a major pullback if the NASDAQ continues to trudge higher?
Here's where it really gets down to. What we know is there are only 3 sectors that are outperforming the market, right? And what we do know is the market's up 6% in the year, but the median performance is up only 2.2. The equal weight is up 3.5. It's so dependent on just the areas you're referring to. Top 5 stocks are bigger than the bottom 280 in the S&P. If there's any faltering in that group, Apple's not faltering, but we saw Facebook falter, right? We saw Netflix falter. If there's any trouble in that,
but
we can't break out.
You do have other things to fill the void, perhaps. I mean, healthcare is coming off a great month.
And healthcare's back
in
to
July.
Its form, right. It's the best performing sector in the June-July.
Yeah,
period,
and it's a large sector. It's not.
It's not small, but remember, it's not the same as what we know is we're so dependent on Amazon and Apple. That's really.
Let's say we break out through in the S&P.
Well, eventually, let's say this. Remember, all double tops eventually are exceeded, and you go on to make new highs.
Right.
It's the principle of the most people believe that when you get to a high and if you break out, that you're going to break out. That's what bull traps are about. In fact, if we make a slight new high, I mean, it draws in computers. Right. Chart monkeys like me say, oh, look, here it goes. It's exactly wrong to chase that.
The other thing you have to look at, I think Carter would probably echo this, is the Russell was on fire from the spring until the middle of June, went basically straight up. Since then, it's gone sideways to slightly lower. So if you're looking for reinforcement on his transports, I would look at the IWM, and I would look at it in the sort of around the 165 level-ish for critical support. So if you want reinforcement for transports, look at the Russell.